Paul Brown here from Wealth 21. I put together a market update video, start of August, just covering the returns on various markets and so on. So let's begin. Firstly, general information only. There isn't any details that relate to your specific situation. So if you have any specific questions, please feel free to give us a call or an authorised financial advisor. Firstly, let's just have a look at index returns to the 30th of June 2026. So I've got them over various time periods here: 3 months, 1 year, 5 years and 10 years. Looking at the 1 year returns, the best performing sectors over the past 12 months were global listed property, global infrastructure and global shares. So the global markets have done well. Australian listed property actually had losses over the past financial year. So over the past 10 years, you kind of get the results you expect, with Australian shares and global shares being the best performers, along with global infrastructure, which has been consistently strong over that period. Looking now at Australian interest rates, so this is a 10-year period, so it covers the period of COVID, of course, where interest rates were reduced to near zero. And then inflation emerged in 2022 when the Reserve Bank of Australia increased interest rates quite aggressively, up to around 4.5% or 4.35%. They did reduce in 2025, but when inflation lingered, interest rates have now been increased again recently. So looking at inflation, so inflation prior to COVID was pretty low, below 2%. It did increase up towards 7% post-COVID and during 2022. And then with the increasing interest rates, inflation was brought under control, but still, around between 3 and 4% at the moment. It's increased a little bit recently because of the increases in petrol prices, which is a significant component of inflation. It's a little bit higher than the Reserve Bank would want inflation, though. So looking at the unemployment rate, again over 10 years, unemployment rate prior to COVID was around 5%. It increased in 2020, but then it decreased. And unemployment, the Australian unemployment rate is still around 4.5%, which is a little bit below average. So looking at the 10-year bond yield, now this is a risk-free rate of return. It was actually reducing during 2019 as well. The bond rates are very low, and then as inflation emerged, bond prices increased, and we're almost at the highest point, around 5% in Australia. Now, of course, there's an inverse relationship between bond yields and bond prices. When bond yields increase, the price of bonds decreases. And this is just a bond, Australian bond ETF, to just show that when bond yields increased in 2022, the price of bonds went down. Okay, so the income increases, the price decreases. Okay. So looking now, this is the ASX 200 Australian share market 10-year chart. Shows the big 40% drop in March, April 2020 with COVID, but a year and a half later it recovered. And I mean, we get the normal ups and downs that you would expect in an Australian share market chart. I mean, it dropped a little bit it dropped pretty significantly in April 2025. This was to do with the tariffs. Over the past 12 months, actually, if you look at the chart over the past 12 months, you'll see there's been not much growth in Australian shares. Most of the return from shares in the last 12 months has been driven by income. Okay, this is the Australian listed property securities, or AREIT chart, and this has been quite volatile. And it did drop very significantly with COVID when there was uncertainty over commercial office space, industrial sheds, shopping centres and so on. Recovered some ground, but actually if you look at the price level over the past 10 years, the Australian listed property index actually it's increased, but not much. So most of the return from listed property over the past 10 years has been driven by income. So turning now to the United States, and this is the interest rates. So interest rates had been increasing in the United States. Then they, like Australia, they reduced interest rates to near zero during that COVID period. And then when inflation emerged, of course, they had to increase the amount of, they had to increase the interest rates to counter inflation. And the US Federal Reserve has actually been dropping interest rates since 2024. So this is inflation, and again, inflation was pretty low in the United States prior to COVID. It increased rapidly, similar to Australia in 2022 because it was a global thing. The United States has brought inflation under control. It's a bit under 3% at the moment, between 2 and 3% at the moment. And the bond yields, again, not the same chart as Australia, but the bond yields increased in 2022. We're above 5%. The US 10-year bond yields a little below that. And this is the S&P 500. So this is the broad US share market index. It's had some volatility as you expect. It fell quite a bit in April 2025 with the tariffs, and again when the Middle East tensions rose, but then it's responded again. So the US share market over the past 10 years has been trending positively. Okay, just a couple of other charts on commodities. This is the gold price. So the gold price has increased quite significantly. Since about start of 2024, it's dropped in the last 6 months or so, but it did increase quite rapidly. And the other commodity I've got a chart for is the NYMEX, or the West Texas crude. So the oil is important because it's a big contributor to inflation. It's quite a volatile chart, and recently there's been lots of up and downs, obviously, with the supply issues, Straits of Hormuz, and so on. It did drop significantly, back in March 2020, the oil price was below $20 there. So moving on now, there's a couple of indexes I wanted to chat about, and I've spoken about the volatility index in the past, or the VIX index. It measures expected volatility. It's often called the fear index. It spikes reflecting elevated market uncertainty with investors. It's derived by looking at what traders are paying to hedge future price swings, and a reading below 20 indicates stability, and above 30 indicates turbulence. So remember those numbers, below 20 and above 30. So just looking at the chart, you can see some periods of high turbulence there. Back in 2022, when inflation was increasing, this is a 5-year chart. So you had some periods of higher VIX index readings in that time. Back in April 2025, though, that was a pretty significant level of volatility because of the tariffs, and again it spiked up again above 30 in about April this year, with regard related to the Middle East conflict. Okay, it's actually a pretty low level at the moment. It's below 20 at the moment, which signifies market calm, really. Now, the second index I wanted to discuss was dispersion index. Probably less commonly known than the VIX index, but what it does is it measures stock divergence, or the expectation of how much individual stock returns are going to vary from each other. And I guess this is to do with the US share market, because they've got a lot of data and a lot more stocks. But even in Australia, you may be aware that there's been a lot of divergence between Australian stocks as well. You've had resources stocks in Australia that are up above 50% over the past 12 months. Then you've had stocks like healthcare stocks that have had losses of over 50% in the last 12 months. So there's a lot of divergence between individual companies. Okay, so a high DSP signals greater opportunity for active managers to outperform the index as well. It's a good environment for stock pickers because they can look at the company's that are well placed. Okay, it's derived from implied volatility of single stock options, and a higher DSP generally leads to lower VIX because individual stock movements offset each other. So let's just have a look at the DSPX chart over the past 5 years, and you can see that the DSPX has actually been, it's actually a pretty high level at the moment. Remember, the VIX is actually quite low at the moment. So dispersion index is quite high. So just higher than, not the highest it's been, but it's quite high. It's been high at the start of July. Okay. Any questions, of course, you're very welcome to give us a call. Got the phone number there and email addresses there for Paul, Jenny, and Kylie. So take care and thank you for listening.